Hello, everybody. Welcome to Monday Morning Must-Knows. My name is Merlin Rothel, and here are 3 important things to pay attention to for the upcoming trading week. Now, before I dive into that, let's take a quick peek at what happened last week. Of course, we had the FOMC meeting on Wednesday, which came in line with expectations. It was a 99+% probability they were going to keep rates right where they're at, and lo and behold, they did. But what was more surprising really was what other central banks had done. For example, the Swiss National Bank was expected to raise 25 basis points because, well, maybe they thought that their markets are going to be worse than expected. And all of a sudden, they didn't change at all. They kept right where they're at. Also, the Bank of England was supposed to raise 25 basis points. That was baked into the market, and they also decided not to raise. So some interesting about faces from some other central banks out there. And I think the most important part was just the overall uncertainty it caused on Wednesday, Thursday, and on Friday's session. We saw some pretty sharp declines. These indexes for last week down almost 3% across the board. So pretty ugly for those of you who are bullish. For those of us who are bearish, some great opportunities. Now let's dive into what's happening this week. Of course, I'm going to start you off with the norm. We'll go to our earnings calendar. I know, boredom sometimes for you, but we'll start there and work our way backwards. This week we have 310 companies reporting. Not a lot of names, a couple of big ones. We start things off on Monday with BYD. Now this is one of those darling EV companies out of China. Warren Buffett was invested in them, and I put it on the list because there's a lot of renewed interest in EV stocks. Of course, there are hundreds of them around the world, and which one? Well, this one seems to be pretty popular, so I threw it on the calendar. Going to Tuesday, you've got Costco and Cintas. Wednesday, you've got Micron Technologies, Paychex, and on Thursday, Accenture, Nike, Jabil Circuit, and CarMax. And rounding things out, you've got Carnival Cruise Lines on Friday. So, all right, there's a few important names that you might recognize on that one. Now, we shift our focus to another topic, which of course is growth. We heard Jerome Powell at the press conference shortly after the announcement that rates were going to stay the same, talking about GDP. And he made a real clear point that he expects GDP to slow. We also saw the summary of economic projections, which is a report that you can download directly from the Fed site that is basically a summation of all of the bankers that are a part of the FOMC giving their opinions about where they think things are going to go. Right now, you're looking at about 2.5 to 2.6% is where they expect GDP for 2023. All of a sudden, those forecasts had shifted down significantly and also much more distributed, meaning that these bankers and economists really don't know where our economy is going to go. So we have a GDP number coming out. And as we remember, we've talked about before, there are 3 different revisions of GDP. You have the preliminary, you have the advanced as the first one, then you get the preliminary, and then you get the final. Well, we've already had the advanced. They raised that one. We had the preliminary. They cut that one, I believe. And now we get the final. So right now, it's clear that they really don't know which way GDP is going to go. As you can see here on this chart, we have seen over the past 3 readings on this, a slight down arrow here trending to the south side, which is not necessarily a good thing, but it does support what Jerome Powell was talking about. Now, right now, the expectations are that we're going to see a jump up in GDP. Currently, it's sitting at 2.1. I know it says 2.0 on the screen. It just depends on which data source you're getting it from. Currently, GDP is at 2.1, and they're expecting it to jump to 2.3. Now, I find this somewhat interesting because the previous 2 readings of GDP, the advanced and the preliminary, have been significantly off from expectations. So while we don't know which way it's going to go, the assumption based on what Jerome Powell has been saying is that GDP is actually going to be contracting. Markets are expecting it to be better than expected. So what I expect is not really has anything to do with GDP. It has all to do with the time that this announcement is released. That's going to be, as you can see, Thursday at 8:30 a.m. Eastern Time. It's going to be 1 hour before the markets open. So that will be baked in by the time that most of you get there, but just remember there will be a lot of volatility based off this announcement, and that may be driving those markets on Thursday. Now, the next piece we want to look at takes away from GDP and goes into probably the more important number. We've been talking about this for so many weeks now, and that is inflation. The Core PCE Price Index is due to be released Friday at 8:30 a.m. Eastern Time, and I've been making the point that the hard red edge of this chart has been showing stabilization. You can see the past 2 readings have been at 0.2, and lo and behold, the expectation, drum roll please, what do you think it's going to be? Well, it's expected to be 0.2, so it would be the 3rd consecutive month that we're seeing the Core PCE Price Index stay at 0.2. The reason that I keep talking about this is the Fed has made it a very clear point they want to get inflation down to 2%. So if we have a Core PCE Price Index number come out at 0.2 per month, times that by 12, you're looking at 2.4%. You're pretty much in line with their expectations. So right now, it feels like we're almost meeting their targets. So this week, light on earnings, You have some pretty interesting announcements with GDP on Thursday, and then as you can see here, you have Friday at 8:30 a.m. Eastern Time, the Core PCE Price Index numbers coming out. This will probably be the biggest mover. I expect Friday to have the most volatility. Bottom line is about preparation and making sure you have a plan in place so when these announcements do come out, you're not caught off guard and maybe even find some trading and investing opportunities off of it. That, my friends, is your Monday Morning Must-Knows. We'll see you next week.